board, Osho Krishnan from Angel One, who's joining us on the technicals. Hi, good afternoon, Osho, and thank you so much for taking the time out and joining us. Osho, let's talk about the first stock that you've picked out for us. You've picked out CAMS for us on the charts. That stock in a market like this is trading up in a way 2% in today's trading session. Do you see this momentum to build up and continue?
Very good afternoon, Ankita. Firstly, thank you for having me at the show. Well, yes, no doubt, technically the counter is looking quite positive. There has been multiple developments, positive developments. Recently, the counter has retraced from the short-term moving average, and the whole technical setup looks quite robust for the counter. And I'm expecting near about 830.35 to be seen as the immediate target. And once it reaches the zone of 835, then from there almost another bullish rally can be seen. So overall, the technical setup is quite bullish, and tips should be added well for the counter. So whole technical setup for CAMS is quite on the bullish side.
Yes, and on account of good brokerage notes coming in and a strong set coming in, Ether is up in a way 14%. All right, let's move on and talk about the stock that Osho has picked out for us. Osho, you picked out 361. Tell us on the charts, how does that share look like? In today's trading session, it's up 1.5%. Some traction that we've been seeing in the last 2-3 days. Do you see this up move to continue?
Overall, the counter is looking quite positive. There has been a strong consolidation in the wider range of 1150 towards, and on the lower end 1080, 1090. So overall, it is into a very healthy consolidation phase. There are support from cluster of its exponential moving average. Plus, there has been multiple positive crossovers within the EMA. So there are multiple positive developments on the technical front, and with the kind of momentum the counter is into, now I'm expecting that from here onwards there is a potential for a consolidation breakout. So near about the zone of 1160-65 is a kind of a consolidation breakout levels for the counter, and I'm expecting that in the coming period it has potential to zoom towards the zone of 1220 to 1230 in the shorter term duration. So overall, the whole technical setup is quite positive for the counter, and I'm expecting that in the short term period there is a strong potential breakout that can be seen in this counter.
All right, I think you've picked out another stock, that's Concord Biotech. Doing quite well in today's trading session, about 1% up. What is it looking like?
Again, this counter was into a very strong selling spree. There has been consistent selling pressure in the counter, but again, in the recent times, in the recent 2 months, the counter has now seen some kind of a strong reversals. And also on the short-term time frame, the counter has now even emerged above the 200-day simple moving average, followed by multiple positive crossovers. So I'm expecting that now the potential bullish reversal is into picture for the counter, and one may look for buying opportunity on the higher end. The first and intermediate target that can be seen in this counter is near about the zone of 1550. So once it breaches the zone of 1550, then again we need to review. But again, if there will be any sustainability above 1550, then on the higher end, 1700, 1750 can be seen as the next potential target in the medium term time frame. So overall, the technicals are quite bullish, and there is a reversal pattern in the formation for the counter.
All right, so led by sustained demand and operational improvements. A strong set coming in for KEI Industries, and that stock is up in a way with gains of 4%. Let's move on. Osho, you've picked out a name from the pharma pack as well today. You've picked out Dr. Reddy's. On the charts, how does Dr. Reddy look like? What are the levels that you're tracking for Dr. Reddy's?
See, recently the counter has seen very strong correction from the zone of nearly 1400. The counter has plummeted towards the zone of 1100, 1120. But looking at the historical trend, the zone of 1100, 1080 has provided multiple cushions to the counter. And looking at the same technical setup and historical trend, I'm expecting that from here onwards, now the downside seems very limited. And from here onwards, the risk reward is quite favorable for the bulls. So there is a possibility of a reversal, technical pullback in the counter. On the higher end, I'm expecting around the zone of 1240, 1250 to get retested in the counter, while on the lower end, 1120 seems to be a very strong support for short-term traders. So one may look for buying opportunity. Technical data is showcasing a kind of a reversal from oversold trading. So there is a possibility of a decent technical pullback in the counter.
All right, now I know its issue price of 2,150 rupees. Now, let's go back to Osho. And Osho, you've picked up something from the defense pack right now. And Paris Defense is the pick that you are tracking now. Looking good today. but tell us a bit more of why you've picked this one up.
See, overall, I'm expecting that the whole defense counter can see some kind of a strong recovery from the current zone. And Paris defense is technically seems quite robust. There has been some kind of positive development in the counter, and it was hovering above the short-term moving average. So, in the recent duration of 2 to 3 weeks, the counter has been into a strong consolidation around the 20-day exponential moving average. And again, in the last three trading sessions, there has been a kind of a strong momentum in the counter. So going on the technical fronts, I'm expecting that with the kind of sloping trend line pattern it has reached, there is a possibility of retesting the zone of 1360 followed by 1400 in the short term perspective. And if there will be any momentum beyond 1400, then we might witness another 200 point of rally in the counter. So one should definitely keep this counter in the watch list and even can prefer from short term perspective.
Though it has cooled off since morning, as you can see in the charts, it's nonetheless trading with gains of more than 3.5%. But let's move on and take a look at what Osho has picked out for us. Jio Finance is what Osho has picked out for us. On the charts, how does Jio Finance look to you, Osho? Because, this one has been seeing a lot of traction in the last 5 days. It's up 11%. Do you see this upward momentum to continue?
See, overall, the technical setup is positive. There has been a consolidation breakout in the counter. So 245.48 was the resistance level from where we have seen a kind of a bit strong breakout. And on the higher end, near about 265, 270 is the resistance. So at present levels, the risk reward is not very much favorable in the counter. And also the stock prices is now hovering around the 200, the simple moving average. So technical setup is positive, but it will be advised to start accumulating the counter on any dip towards 250 to 45 kind of a zone. 270 will be seen as the first target, and if there will be any strong or continuation above 270, then we may witness another 20 to 25 points of rally in the counter. So 295 will be the target from medium-term perspective.
9 crore rupees. Now, the block deal comes after Meesho reported a narrower loss for the June quarter. The e-commerce platform posted a net loss of 132.8 crore rupees compared to a loss of 298.3 crore a year earlier.
All right, let's move on from Meesho to DOMS that is in focus. Well, for DOMS, the profitability has remained under pressure due to the margin contraction, resulting in a decline in EBITDA and the PAT during the quarter. Now, revenue from operations increased 19% on a year-on-year basis to 671 crores, while the PAT stood at 44 crores, declining 22% compared with 57 crores in Q1 of FY26. Now, the EBITDA margin stood at 12.3% during the quarter, and on account of weak set coming in for DOMS Industries, that stock is down and out 4%. And let's move on to the one that Osho has picked out for us. GAIL is the name, and GAIL, Osho, on the charts, how does GAIL look like to you? Because GAIL has been very range bound in the last 6 months. If you look at the stock, it's been in a range. So do you see this to break out of that range now?
Yes, you mentioned very correctly. The counter has been into a very strong consolidation zone. There has been very strong range bound movement that is being seen in the counter, but in the last two trading sessions there has been some volatility which was even backed by very strong volume. So I'm expecting that if it moves beyond the zone of 178, that will be a consolidation breakout for the counter. So one should wait for 178 to have a decisive breakthrough, and then from there onwards we can witness a kind of a strong momentum towards the zone of 192 to 194 in the short term period. So overall, this counter is on the verge of giving a breakout. The technical setup is decent enough to have a bullish biasness. So one should keep this counter in the watch list. Any breakout above 178 can provide very strong momentum in the coming period.
All right, let's now downward trend. It was down more than 4% even as we speak. Now, this comes at the back of the food regulator, FSSAI, prohibiting the firm from selling products with misleading 100% claims. Now, the FMCG major has told ET now that it is examining the regulator's order. Of course, Dabur India's share price has faced downward pressure recently due to a combination of underwhelming volume growth in its latest quarterly results. Now, the broader macroeconomic headwinds and the structural valuation adjustments as well. The FMCG sector at large is, of course, grappling with demand challenges. While Dabur has seen a resilient rural demand, urban consumption is yet to recover.
All right, with that, it's time to shut shop on this edition of Market Fatafat. Osho, thank you so much for taking the time out and giving us your picks for the day.